And of course, what I'm referring to is, do you trade the volatility, the probability and statistics, also known as the VEPS? Yes, it's the acronym we coined at Alpha Trading. And if the answer is no, well, then you are like 99.9999% of people who trade. And that's okay. The retail traders market barely even knows this. In fact, doesn't really know this exists at all. There's very few of us who trade this way. Probably just some thousands of people who are even aware of it. When I say that's okay, I mean, if you trade using traditional TA, it's certainly not the best way to trade. And in fact, more than 99% of retail traders statistically get wrecked. They lose their trading capital. The common statistic coined as a phrase is 90% of retail traders lose 90% of their trading capital within 90 days. The 90-90-90 rule. Now, is that the case for every single retail trader? No. There's about 1 in 10,000 traders who are consistently profitable using traditional TA. Are you one of those 1 in 10,000? Chances are you're not. If you are a statistical anomaly, a major outlier, and congratulations. Keep doing whatever you're doing, if you're happy with it. If, like the other 9,999 out of 10,000 traders, you are not consistently profitable as a trader, well, then maybe you should look for a better way to trade. And guess what? That is exactly what the VEPS is. How do I know this? Well, it's not just magic I pull out of a crystal ball. The high frequency trading firms that run the markets by actually placing around, on average, 80% of all the trades on the markets, they use the VEPS. They probably don't call it that because, again, that's a phrase we coined at Alpha Trading, and we simple retail traders who happen to be using the highly relevant maths that the high frequency trading firms use. How do I know that those are the highly relevant maths? Again, the bots that run the markets, that run millions of trades per second, and whose trades last on average 0.2 seconds or less, because they have big positions that they can move, and so they can move whole assets up or down to their targets and take profits very quickly. They are not using traditional TA. In fact, they are the smart money, and they consider traditional TA to be means and methods and tools to be used exclusively by the dumb money. And that's what they call retail traders, the dumb money. Because the dumb money doesn't even know what the smart money is looking at. What is the smart money looking at? They're looking at volatility. More and more of them are looking at entropy, probabilities, and they look at statistics. Why? Because those are the things that actually matter. What is volatility? Volatility is the standard deviation of log returns on investment. In other words, the standard deviation of returns using normal distribution. If you don't know what normal distribution is, and you learned about the bell curve, normal distribution is that bell curve, right? 68.3% of the results typically end up within the first standard deviation, 95.5%, end up within the second standard deviation, and 99.7%, end up within the third standard deviation. And there are other standard deviations that go even higher, 99.9999%, etc. And you can go up many standard deviations, but the vast majority of returns typically go not much higher than the third standard deviation, even though it does occur. When you have major outliers like that, though, one thing is for sure: the asset will typically do what all assets do, which is, when they're done moving away from the mean, then the next thing they do is begin to mean revert. And assets always mean revert after they are done moving away from the mean. How do we know that? Statistics. You can see this very clearly on our alpha trading tools, and you can see when they're moving away from the means and when they begin to mean revert. Now, what's especially interesting about the alpha trading tools is that we have a tool that is called the RMLR. And the RMLR shows you exactly not only when it's moving away from the mean, but pretty much gives you a very precise time when the mean reversion begins towards that RMLR. Why is that interesting? Because you can use it to gauge targets for entries and exits. What else does it do? It shows you the future forecast of the RMLR. So it shows you the direction of the RMLR in the future. And it shows you the direction of the standard deviation bands of that RMLR in the future. So again, you can use it to gauge your targets incredibly precisely, and to know when the asset is actually in mean reversion, or when it is in fact completed, when it is moving away from the mean or has completed the mean reversion. And those are all extremely useful pieces of information when you're trading. And of course, if you're trading low time frame volatility and entropy, that is extremely useful, especially if you're moving positions where you can't afford any slippage, or it could eat away all your profits. And you don't want to be wrong by seconds, or let alone minutes, because that could definitely eat away your profits. So, how do you get on board with this kind of way of trading? Well, you can easily sign up for the Volatility Starter Kit at Alpha Trading. It is free. You can get free indicators that you can use to learn how to trade volatility, probability, and statistics. You even get a free pre-populated chart with those indicators. All you do is jump into the Discord. The URL is at alphatradinghq.com/discord. Again, that's alphatradinghq.com/discord. And you go into the request support channel, and you create a ticket by pressing the button that says create a ticket. And then you just submit the information that's asked of you. It says, say what you want, and you just say, I want the Volatility Starter Kit, and you write your TradingView username, and then you'll get access for free, and you can use those indicators for free, and that chart for free, and all the educational information that goes along with it, including written information, documentation, a free cheat sheet that shows you the tendencies of the probabilities of the price action with volatility. It also works with entropy. It's all for free. You also have how-to tutorials in video format that you can watch for free on YouTube or even on TradingView. And all that is free. You can even participate in the chats for free. And you can even participate in the live streams for free. And the live streams are typically 5 days a week, Monday to Friday. And they start usually around 9 a.m. Eastern Time. And it's open for anybody who wants to join in and learn how to trade, volatility, probability, and statistics. And you can ask to look at whatever asset you're interested in. If you want to know how to read it, if you have any questions about how to trade with the indicators, etc. And that is how you get on board with trading volatility using the alpha trading system. So again, it's all for free to join in and learn, and to actually use those indicators to actually run trades. Once you've learned how to use them well enough, you can certainly run trades with the free tools. That's our baseline of tools. Those are the fundamental tools you need to learn how to use. Once you've learned how to use those tools and even run a bunch of practice trades and or real trades, and you see that you're consistently winning those trades, whether they're practice trades or real trades, and you're comfortable with it, you can, of course, upgrade. You can try for free a 2-week free trial of our premium indicators. And once you see that those indicators are working great for you, and they're obviously far more advanced and have a lot more power, well, then you can choose whether or not, if you're a serious trader, you can choose to upgrade. Like for $99 a month, you get all the indicators that we include in that package. It's something like 40 indicators. It's really crazy. Huge amount of indicators that you can choose from and use. You can use them all. You can use just a few of them. It's up to you. We don't charge you extra per indicator. And yeah, you'll have all the tools that we make available to all the pro traders. So that's that. Happy trading.